What's going on, everybody? Welcome back to Finance with Parks. In today's video, we're going to talk about something super important if you're looking into buying a house in 2022. Over the last week, interest rates have shot up from where they've been recently. They're still not absurdly high, but they are climbing, and they are climbing quickly. So we're going to talk about what they've risen to, what that means for you, and what you can do to help out your situation in 2022. Let's get into it. Welcome back to the channel. If you're new here, please consider subscribing. We talk all things personal finance. And today we're just going to jump right in. Look at what rates have done over the last, 2 months or so. So this is just a level set, right? This is a 30-year fixed rate mortgage, which is probably the most common loan that you're getting on a house, right? And you have to borrow money to pay off your home. Well, the bank will lend you the money to pay off the home, but they are going to charge you interest or a fee essentially to borrow that money. And the rate that you're paying represents essentially how much money and interest you would be paying if you didn't make a payment after one total year. So for example, we look at this 3.922%. That's what they're at right now in general. If you had that rate, let's round that to 4%, let's say. If you had a $100,000 loan for your house and you went a year without paying that loan and it accrued 4% in interest, that means your total would now be $104,000, right? Or 100K times 0.04% is how much interest it accrued, which is $4,000. Now, that's huge, right? When it comes to being able to afford a house is the interest rate that you're getting. Because the lower the interest rate, the less you're paying extra beyond your original principal. So over the last couple weeks, look at what the rate has done. It was down here like 3% for a 30-year home loan. And now, it hit 4% at a certain point this week. Back down slightly to 3.9, but still, just huge numbers from where they were pretty much for the last 2 years. I want to say that they were down in the 3.5% range. We locked our rate in. We bought our house 6 months ago and locked in, I think, at 3.2%. And there are people before us that even got down in the 2.8, 2.9% interest rates, which is incredible. Now, with all that said, in the grand scheme of things, the interest rate for buying a home, believe it or not, 10 to 15 years ago used to be 6 to 8%, which is insane. But the reason these numbers are so low is that the government has lowered interest rates in general, right? And when the government lowers interest rates, what this means is the banks can loan out that money at a lower rate. They want to get the economy going, right? With COVID and all the problems we're having, they want to encourage people buying money because it keeps the economy propped up in a way, right? When you make money more expensive to borrow and these rates start to trend upwards, you can really hurt the economy's growth because people won't be spending in the same way. Well, the situation we've gotten into now, right? Everyone's favorite I word this year is inflation. Inflation is the rising cost of goods, which is often driven by too much money in circulation. So we're going a little down the rabbit hole here, but it all needs to make sense in a general aspect, right? When the economists want to slow the economy down and inflation is rising too fast, they're going to start to raise rates so that people start spending a little bit less money. Well, if you're looking into buying a home, this could really hurt you this year. So with all that said, my number one advice would be to try and lock in this rate as fast as possible, right? You look at this trend, if you're interested in buying a house or you're getting close to closing on a house, you probably want to call your bank and get that rate locked in ASAP because of how quickly it's been climbing. Also, if you're at the point where you're really not looking at a house or you're thinking about it in the next 6 months to a year, I would really be cautious because from a top level, right, the way I see the market right now, home prices are very expensive. There's no way around that, right? But if you combine that with buying a very expensive house and you get screwed on the interest rate, you're talking about something that could really set you up for, years of failure. So if it's not an immediate need, start to think about your options here of extending your timeline or at least waiting for the home prices falling slightly to match this increase in rates or in interest rates that you're going to be paying. Hopefully that was helpful. If you enjoyed this video, if you could like the video and subscribe to the channel, that would be greatly appreciated. Thanks again for watching, and remember, finance is fun. See ya.